Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 18th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Alright, let's kick off with a look at the overnight changes and price moves to be aware of. And if it felt like a quiet session over the last 24 hours in global Forex, that's probably because it was. Very few moves of note. Those moves that are worth mentioning were largely focused on Asia Pacific. You can see that there were gains for the Australian and New Zealand dollars against the US dollar, but that the yen was moving in the other direction against the greenback, easing to trade back above 112 to the dollar. Dollar index for its part unmoved, literally unmoved on the day, 94.50, trading shortly before we recorded the video, well below that 95 level that we think is psychologically important, if nothing else. I wonder if that's going to change today, or whether a relative amount of dollar weakness is the theme for this week. Okay then, what's on the calendar? Events that may move the markets today. Not too much in the way of high impact data, but still a pretty busy calendar for us to consider. We've already had house price index data out of Australia for the second quarter, and the release of the RBA meeting minutes. And to come from central bankers at 7:15 this morning, we will hear a speech from ECB President Mario Draghi. That's followed at 8 a.m. by the release of industrial sales and orders data out of Italy for the month of June. At 12:30 we switch over the Atlantic for Canadian manufacturing shipments data for the month of July, and back across the border to the US proper at 12:55 for the Red Book Index for the week of September 14th. We'll take a break then from major data until 20:30 this evening, when we'll see the API weekly crude oil stock releases for September 14th. That's a private measure of crude oil stocks in the US. Then at 2100 we'll have the first of some New Zealand data, the Westpac Consumer Survey for the third quarter in the country, and then at 22:45 current account and current account GDP ratio data for Q2 out of New Zealand, and that'll be followed at 23:50 by adjusted merchandise trade balance data for August, imports and exports data also for the month of August out of Japan. Okay then, on to breaking news and comment that's caught my eye overnight. And first of all, the US 100 index has had its worst day in over a month, falling by 0.56% as trade war fears resurface. Those fears are proven to be genuine when Donald Trump announced he was to impose fresh tariffs on $200 billion worth of Chinese imports. The penalties will rise from an initial 10% to 25% later in the year, and once these tariffs are in place, there will be tariffs on nearly 50% of all Chinese imports into the US. It's also worth noting that China has said that it will retaliate with $60 billion worth of its own tariffs on US imports. Meanwhile, staying in Asia, South Korean President Moon Jae-in is to start a 3-day visit to Pyongyang today for talks with his North Korean counterparts, and they'll be focused predominantly around plans for the denuclearization of North Korea. So there is some progress there at least. Right then, food for thought, something for you to take away with you into the trading day and beyond. Why not think about this? Canadians are spending more of their income on debt servicing, new data reveals. On average, they now spend around 14.2% of their income, 14.2% I should say, of their income, paying down and servicing debts. Canadian households, it turns out, are the most leveraged within the G7, according to data from Bloomberg. And the Bank of Canada will need to watch this data closely. Remember, the Bank of Canada has raised rates 4 times in the last 2 years, but those rate rises are now starting to bite. And here we can see the sharp pickup in the percentage of household income that Canadians now spend on servicing debts, well below the levels that we saw in 2008, but nonetheless climbing and climbing quite rapidly. And that could be a concern to a Bank of Canada that would like to raise rates if it could. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning thoroughly. Thank you very much for your time.